Hello, everyone. Welcome to the Lim and Tan client sessions, 25th January 2021. Right, this again is a weekly review of the market's performance, and we're going to talk about STI first, and then we're going to look at various sectors and potential stocks to look out for going forward. Okay, so we are going to look at the Straits Times Index right now. Um, Unfortunately, after the last video coverage of the market, the STI has actually did not perform as well as we expected. Okay, so you can see here we had an upward movement, in fact, a breakout, but the next 2 days it start to fall towards the support level. As today we close at the support level. Okay, so if we look at the daily chart, definitely it doesn't look good because the trend has started to turn. There is no more uptrend. We can see the same low and almost the same high. So in such a case, what would be the next scenario for STI? We could be seeing a continuous or sideways if STI is able to rebound from this support level and back to resistance level and pull back, then we'll get a sideways towards the Chinese New Year in February. Um, if the market decided to go for a February correction, which I did mention it before, right, then you could probably witness the support breaks to the 20-day MA, and then once it touched the 20-day MA, it breaks further, then down to the 50-day MA, then this is where you can start to see a complete downtrend. Okay, so when you see a lower low, lower high, then of course downtrend starts to form up. In this case, I do see a lot of counter in SGX, especially the transport sectors. They are starting to uh, show some weakness, and they may be going for the change of trend. If they break support, they may go down as a downtrend looking. And if they manage to hold a support and rebound, of course, yeah, they are likely to stay in their sideways range. Okay, so let's take a look at some of the weak counter first very quickly. I don't want to elaborate too much on that because there isn't any new trends in looking at these counters, except that if there is some sign of rebound, of course, we will study it deeper. We have, first of all, we have sets. Right. Last week, I think I did discuss if it fail at this support level, and then when you rebound, it actually got resisted by the MA 20 and 50-day MA, and this is where you start to see it goes down. Now, I do have a client who shorted sets and then asked me what to do when sets is trading at this range, at this point. I was saying that I was telling him that you can see that sets is below the 50 MA, you can continue hold, and if it doesn't goes above his 20-day MA, of course, more conviction to hold on to your shorts. Okay, so for sets, you can see there's a support level over here at about 388. Once it breaks down, the whole downtrend will continue right towards the 100-day MA and eventually the 20-day MA as well. Okay, so to watch for support level. SIA, very similar, but is slightly better chart because SIA hasn't really reached the support level, but we can see the topish formation forming. Of course, to plot a straighter line here, we do see support level at 417, and then of course, if it goes slightly lower, 414, this is the zonal support that SIA has. It's a very strong support. And if it breaks below, then the next strong support will be here at the 200 and 100-day MA support level. So as you can see, it's pretty weak for SIA and sets. So the chart goes on with Comfort Delgro as well. So you can see Comfort Delgro fails to go into the uptrend. In fact, currently it's moving on the sideway, but it is not not the healthy to look at it to test support again. I would say that we want to see Comfort Delgro rebound from this support level and eventually stay at the high here in order to go back to its bullish way. But then again, if you were to compare with SETS and SIA, they look very similar. So if every one of these counter were to break their support level, right, they are likely to retest their 100 and 200-day MA as support level. Okay, so they are pretty weak right now. So stay away until we see a clearer picture. For the time being, right? Last week I also covered the REITs. After they hit the high last Tuesday, they begin to descend, and Mapletree NAC goes back to its 20-day MA after a strong rally. So this was like a glimmer of hope where a strong uh, rally over here had a follow through buying, and it disappoint on the next following candles and goes down further to support level. Now, ironically, China and Hong Kong has a very strong rally, and especially Hang Seng today rally up almost 600 points. But this counter, which has a very big chunk of this portfolio in Hong Kong, hasn't been able to rebound, and it comes to test support level. This may be an opportunity for us as well. It's not all bad. If we can rebound from this support level, it may present a trading signal to to push the counter back to its high at 104 and break out to go beyond. So let's see whether this can happen again, and then rebound can take place. Of course, if we can't rebound right away, it may consolidate first, then it go up. So this may happen again over here going forward. So do keep a lookout. Mapletree Industrial, it went up, but quickly descend back to support level. Not very strong, so unless it can rebound back to its high and then test the 100-day MA. Fraser NI, it went up slowly, but it came down pretty fast. So Fraser NAC, I beg your pardon. Okay, so it came down, test the, and eventually come back down to its support level and tested it. And right now it's just sitting right above its 50 MA, which is very crucial here. So I would say that over here at this point, in fact, it looks attractive to start investing in this counter because at support level, normally I will buy REITs at support level. Now, if we were to break this support, of course, we aim for the next support to trade or to invest, likely to be 133. But before 133, there will be 136. Okay, so yeah, Ascenders will maintain at the high, but it did not actually close very strong today. So let's see whether it will pull back and come back to 307 support level. Jardine CNC last week I covered it where you can see my flag pattern. It did have a nice breakout over here at this candle. Look at the volume, is also picking up. The next day it actually went up following its bullish, in fact follow through its bullish buying. Unfortunately, it only lasted half a day. Afternoon sessions, we saw selling all the way back down to 23.30. So this is not a good sign. In fact, it forms a shooting star. So today, I would think that it hasn't confirmed the shooting star yet, but we are still not clear yet. Why? Because it can still go down. So for those who have traded earlier, say at 22.50s, you can start to look for profit taking over here. Okay. Then we have the gloves. The gloves looks pretty healthy now, with top gloves managed to rebound above its 20-day MA and now retest its 50-day MA resistance. So if it can pierce above its 50-day MA, well, uptrend is on its way because we do see a higher low here. So once it breaks up 221, then we expect the next resistance at 229 to be tested. Okay, Riverstone creeping up slowly, piercing above its 100-day MA over here. If it slowly go up back to its high, the next resistance that you may expect is around 174. Okay, so this is a slow and steady counter for the time being. UG Healthcare went to the 100-day MA, tested it, and haven't managed to break out from it. So we got to wait for the breakout to happen. But overall, it looks still pretty healthy. It doesn't look bearish as yet. MedTech consolidating, pending for a breakout. But from the way that it consolidates, seems like it can break out upwards. So the elusive 1.24 target is still there. Okay, so we can take a look on this counter if we can move up higher. So the good sign is it managed to hold above its 100-day MA. Now, as I mentioned last week, the glove sectors doesn't look bad. In fact, it looked good for most of the counters, except for Top Glove. I mentioned, I analyzed last week. But Top Glove has made a big reversal and then start to look bullish again. So we shall see how the glove sectors would move going forward. Okay, so now comes to the bank. We have the bank. DBS disappoint. Why? Because it didn't manage to hold at its support level, and then the 20-day MA was compromised. The next crucial support will be the previous resistance support around 25.68 to 25.80. So here we will be looking for a strong support and expect DBS to hold. And once it starts to rebound from this level, in fact, it provides a good opportunity for us to buy. Okay, so stay tuned, wait for the signal to come. OCBC still look healthy as mentioned last week as compared to the three charts. It still holds at support level. Staying above its support level is good. And if it can rebound back to its resistance, this is a major resistance now because it has been tested 3 times. 1074, 1, 2, 3 over here, and this is where if you can break out from it, it will be strong. Of course, we do not expect it to break out resistance alone. DBS should be able to rebound if OCBC were to go up. Okay, then UOB also managed to hold at it's above its support level, but also consolidating. As I think I mentioned it last week as well. After DPM announced the stability of the property price, we can start to see our banks start to feel uncertain. In fact, the traders in the banks start to feel uncertain, and then we can see that the banks doesn't have the strength to break resistance. Okay, in fact, like I mentioned, DBS, it breaks support. Okay, so probably they're looking for the next catalyst for the next movement. Okay, so of course, definitely it doesn't help the banks today when CapitaLand announced that they are expecting losses going forward because of the valuation of their property asset has dropped. It doesn't really mean that they are losing money upfront, outright losing money, but they are just so-called not doing well, making losses because of valuation, So I believe the balance sheet is still strong, and despite today it had a big drop over here, it still managed to hold at this 50-day MA support. So let's see whether this support managed to hold, and it may present a trading opportunity. But if once it goes below its 50-day MA and breaks below this 316 support level, then we can start to look for a bearish outlook. It may go further downwards towards $3 levels. So we shall see where CapitaLand want to land itself. City development is after got resisted by this MA, they start to pull back. The management has mentioned that they do expect some losses coming in the China investment, but it hasn't been concluded yet because their auditors are still doing the audit work in China in their investment, and the valuation, asset valuation hasn't really comes up. So we shall see where the result, when the result will come out. Once it comes out, where the stock price will be. The good chance is if they start to announce the impairment losses in China, then this is where we can start to see you may have a CapitaLand style of movement as well. So got to be careful, right? So for the time being, I'm staying away from this counter. UOL, you can see properties are not doing well. CapitaLands are going down. UOL also descend to support levels. As you can see, so many charts we have gone through, most of them are not doing well. In fact, they are really down back to support level. So this actually brings our bullishness come to a rest. So January, so far last week we had a good run until last Tuesday. Then we start to see all the stocks start to descend from their high back to its support level. So UOL has a very strong support at 750 to 732. Once all this level breaks down, all hell break loose, it may start to form downtrend. So we got to watch further. So next brings us to Costco Corp. Costco Corp, their report, but I don't think this report is new one. But there are still reports saying that the shortage of container has actually caused the freight price to go up. Costco Shipping, being one of the biggest shipper in the world, tend to benefit from this. I do hear about this shortage of container from my clients who actually work in the shipping industry. So here we do see that Costco Corp is sitting at its 20-day MA. In fact, it goes below its 20-day MA already. Seems to be weak. So we got to wait for a white candle above the 20-day MA to confirm that it can actually rebound back to its resistance level over here at 315. So although that 20 MA is compromised, is pierced below, we still have a support level at 285 and 280 range. So this is another support level for Costco. So we need Costco to rebound above its 20-day MA in order to be bullish. Okay, so watch for the volume. As you can see, when Costco Corp descend, the volume isn't high. So if we see high volume buying as it goes up, then the chance of going higher is there. Okay. Now, now we move on to the tech sectors. We have AEM still going strong, I would say. Okay, and we have UMS hitting the roof as well, all-time high. Right. So we are riding the trend, hoping for higher price action. As long as the stocks is still bullish, hugging the upper band, this is a good sign. Why? Because as it hugs, it can go as high as possible. If it trades very far away from the upper band, then the chances of it returning back to normalcy is very high. So I must say that the funds that are inside UMS, they are very well versed in trading. Okay, so still riding this counter as high as possible. Valuetronics, on the contrary, doesn't really look very good compared to AEM, UMS. The breakout here actually failed to have a follow-through buying, and then we can see the stocks slowly descend back to its support level. So here we can anticipate that if it can rebound to we can test 655 and rebound from 655, then we can see a potential. So if we can rebound from 655 and go back to its high, then we can see some bullishness in it. But as of now, we don't see any. I don't see any strong bullish momentum in this counter. No doubt that it declined with decreasing volume, but without buying, it is still nothing. Okay, so ultimately, we can't descend slowly with decreasing volume and think that it's bullish. Why? Because without buyer, that's a fact. You know, the market still go up with buying pressure, where the traders are willing to pay for stocks at a higher price. So well, I'm still watching. Probably I should take my profit off the table and then go away from this counter for good, because this counter has been slow. I've been holding it for quite a long time, so it's time for me to enjoy my profit. Venture, I do expect a breakout over here above the resistance at 2020. It did break out, but the follow through buying isn't that strong, so it managed to hold at 2020 at as a support level. So today it tried to go up again, but failed to move and close higher. So basically, we got to watch 2020 support level. If it failed to do so, we may see some further weakness. So it's not conclusive yet until it breaks the support level. I think one of the crucial one will be at around 1994. Next, we have the two counters that probably you have heard of. I think it's covered in Lim and Tan research report by Lim and Tan researcher. There's AVI Tech, and then Sunrite. So let's go through why I want to talk about these two counters. Today we receive a report that there is a well, AV Tech, today I received a report regarding the shortage of automobile chips, and AV Tech is venturing into this area as of what they reported last reporting. Okay, so here we can see AV Tech having a support level at 455. From the chart, honestly, I don't see that, you know, there is a very compelling buying, especially when I see the weekly chart. I do see a very long upper shadow here, and this actually doesn't give me a strong appetite to get into this counter. So if the market is not ready to move up because of this report, then probably this counter can pull back to 4.3. And if it pull back to 4.3, then you know, it will be a potential attractive entry point. This counter typically pays a very attractive dividends as well. You know, so even if you don't get it right at the first time, you know, you can actually hold for dividend. You see, if you look at the weekly chart, it has been moving on the uptrend slowly, gradually, but the dividend is still attractive as well. So here we can actually aim for some entry around 43 cents if the weekly chart really pull down the stock price. Then Sunrite fundamentally is undervalued. It is dealing with the tech as well in the 5G sector. So its dividend is also pretty attractive. So it's pulling back to support level. Okay, no entry yet, but we can start to look for some entry around this support level at this region, around this 46. Okay, 46 to 455 to about 48 region around here. Look at the weekly chart. It looks like a weekly flag, but it's not confirmed yet until it can rebound. So maybe if it drift into this region, we don't need a flag to go up. We can let the counter drift down slightly lower and rebound. This is where we can start to look for our entry over here. And then as it start to move back up to 56, it will be fantastic. Okay, so this comes to the end of this week video. So I hope that this can benefit you, and hope that we can see the market rebound towards the Chinese New Year, and then it actually start this correction in after Chinese New Year. That will be good, because this is where we can all take our profit and enjoy the good year ahead. And for the time being, have a good Chinese New Year celebration. Anyway, I'm going to see you next week, so it's a bit early to wish you Happy New Year. But anyway, have a good week ahead, and good trading sessions ahead as well. Okay, Good day and goodbye.